Welcome back to Concise Game Reviews. I'm your host, Relicar Delta, and this is episode 20, another special edition. And this week, we are covering the announcement of the new Ubisoft subsidiary, which will be spun up under the Ubisoft corporate umbrella with a little bit of help from Tencent. A little bit of housekeeping before I get started. This episode is being recorded on April 11th, 2025, and all the information that I discuss here is accurate up to that point. So if you're listening to this sometime in the future and things have changed, or the situation has been adjusted, or Tencent pulled out, or Ubisoft doesn't exist anymore, who knows, right? These things change year to year, decade to decade. Just note that as of April 11th, 2025, this information was accurate. So where do we get this whole thing started at? Why don't we just go back to what Ubisoft announced on March 27th, 2025, and then we'll talk about what a subsidiary is and what it isn't, at least in this case here. And I'll follow that up by discussing why I believe Ubisoft went with the subsidiary model instead of Tencent just reinvesting in the parent company. All right, let's get to this press release. On March 27, 2025, Ubisoft releases a presser titled, Ubisoft accelerates its transformation by laying foundation for new operating model with the creation of a subsidiary and injection of 1.16 billion euros, mind you, of cash from selected investor Tencent. It's important to note that inside this presser, Ubisoft goes on to specify that this subsidiary specifically is taking the Assassin's Creed, Far Cry, and Tom Clancy's Rainbow Six brands within it. So that means any of the intellectual property or franchises that are not those three main, I don't want to say main, but are just not those three named, actually that's the better term to use there, are not those three named franchises, still sit within the Ubisoft parent organization. So again, this subsidiary is only constructing itself around Assassin's Creed, Far Cry, and Tom Clancy's Rainbow Six brands. And I think the important thing there to note as well, especially with the Tom Clancy stuff, is that Tom Clancy's Rainbow Six brands could be in reference to anything, any game, any other spin-off that they create using Tom Clancy Rainbow Six. But in reality, it's clearly meant to convey that Tom Clancy's Rainbow Six Siege is being moved into this subsidiary. Now, before we get into why Ubisoft would be creating a subsidiary now, and what the deal is with Tencent, and very likely what I think, in my opinion, how that conversation went down between Ubisoft and Tencent and how this came to be, before we get to all that, what I want to talk about a little bit is what a subsidiary is and what a subsidiary isn't, at least in this case, because there are variations out there. In this particular case, this Ubisoft subsidiary, so keep in mind there are essentially two organizations in play now. There's Ubisoft, the parent company, and now there is a separate Ubisoft subsidiary that sits, if you're drawing this up, it sits below the parent organization. But this Ubisoft subsidiary does not have any of its own public shares. You can't buy public shares of the Ubisoft subsidiary. You can still buy public shares in Ubisoft Main, but you cannot buy public shares of the Ubisoft subsidiary. It's also important to note that a subsidiary is not a division. So a division and a subsidiary are different organizational structures. A subsidiary essentially almost kind of lives in its own little world underneath the parent organization. A subsidiary has its own, legal obligations. It can be sued independently of the parent organization. It stands separate, but within the parent organization from which it has spawned from. Now let's talk about the financial structure of this subsidiary and how it came to be. I'm not going to read the whole press release to you, but basically what it comes down to is at the closing of the transaction to form the subsidiary, Tencent, the Chinese video game and media conglomerate, is going to invest 1.16 billion euros in the Ubisoft subsidiary for an approximate 25% economic interest in the new subsidiary. And that should be your key indicator, as we'll talk about a little bit later, about why we're seeing a subsidiary created here instead of Ubisoft just reinvesting into the parent organization. Because keep in mind, prior to the creation of this subsidiary, Tencent had already invested in and had a significant number of shares in Ubisoft main or Ubisoft parent company. So keep in mind, when all is said and done, when the transaction closes, you're going to have an Ubisoft subsidiary company that, I hope they give this thing a different name, because I hope for the next 10 years, we're not going Ubisoft main, Ubisoft subsidiary, Ubisoft main, Ubisoft subsidiary. That's going to get kind of annoying. But anyway, at the closing of this transaction, you're going to see the subsidiary ownership be approximately 75% Ubisoft main, Ubisoft parent, and 25% Tencent. And also keep in mind that that ownership level still gives Ubisoft exclusive control and consolidated ownership over the subsidiary. Now let's get into what I think is the most important question to answer, and that's why. Why go to all of this trouble? I don't know if maybe trouble's the right word, but why go to the complexity of rolling out an additional subsidiary, or rolling out a subsidiary underneath the Ubisoft parent organization? And then what I'll do with that is we'll kind of examine that. And then I'm going to take you through what I think may happen at the parent organization, because don't forget, this entire thing is still Ubisoft, the company, right? The broader publicly held company. The subsidiary is only a part of the conversation when we talk about the company as a whole. Now it's time to answer the question, why? Why would Ubisoft opt to create a subsidiary partially invested by Tencent instead of reinvesting in the main core company, the Ubisoft parent company? Why not try to fix the financials or to double down on the core of these main franchises within the umbrella of the main company? Why go to the strategic lengths to create a subsidiary? And I think there's two parts of this. And the first part that I'll talk about is just the current financial health of the Ubisoft main corporate entity. The quick version is that Ubisoft, the corporate entity, is in terrible financial health. Even with the release of Assassin's Creed Shadows, which released here a couple of weeks back, even with the general success from what we've seen from that game, there's nothing that the sales from that game can do to rescue the financial pit that Ubisoft has dug for itself. Let's look at some numbers in order to understand what's going on here. Closing out the Ubisoft's 2022-2023 fiscal year, they were in a negative 662 euro net debt position. That's 662 million euro net debt position. Closing out the fiscal year 23-24, Ubisoft was in a negative 985.1 million net debt position. Now, coming up to H1 24-25, that's just the first half of the 24-25 fiscal year, they were sitting at a negative 1.102 billion euro net debt position. So the line here is relatively clear. The last few years have not been kind to Ubisoft. Now, I know the final number that I covered there was only the first half of H1 24-25, but that was the most recent H1 that they had reported. So I just want to make sure that you have that number. That number came out prior to the release of Assassin's Creed Shadows, but understanding that the company has been posting negative free cash flow operations for practically every H1 half fiscal year position that they post. The story is pretty clear when it comes to Ubisoft. Their financial position is terrible. And one of the biggest contributors to this fact is that the company employs 19,000 people now. That's down, actually. Coming out of 22-23, they employed more than 20,000 people. They're down to about 19,000 now. And Ubisoft's struggle for pretty much as long as I've been commenting on games, as long as I've been, doing something on, X or Twitter, or YouTube, or, whatever project I have going on at the moment. I have a little saying about Ubisoft that I, will basically repeat to people who ask me about it. And I'll say, Ubisoft's biggest problem, and this is even during their best years. Ubisoft's biggest problem is that they have half the revenue of their AAA comparables, such as EA or Take-Two. They have half the revenue, generally speaking, with almost double the headcount. So they're getting hit from both ends. And even when Ubisoft's most successful years, they were always kind of floating on a knife's edge in terms of success versus, being underwater from a cash position. And they were always heavily reliant on their biggest titles like Assassin's Creed and Far Cry. And then eventually once Rainbow Six Siege came along to essentially carry the company forward. But that money and that cash flow eventually slowed down and started to run out. And their headcount eventually caught up to them as more projects were canceled or failed in the market or failed to make a splash. They had all of this base cost just eating into them as a company. And coming out of the COVID years, the what you want to call it, the flattening or the downturn in the market really hurt them more so than their other industry comparables. Let's look at some other numbers just to finish making the case here about why Ubisoft Corporate is in such a terrible financial position. Closing out the 23-24 fiscal year, they were sitting at a negative net free cash flow position of negative 509.4 million euros. The year before, they closed out negative with a very similar number. This year's a little up in the air at the moment. We're currently sitting in the back half of their fiscal year. When they had reported the first half, H1 of fiscal year 24-25, they had reported a negative 126.3 million euro non-IFRS net free cash flow position. We don't know how this year is going to turn out at this point. Assassin's Creed Shadows has sold well by most metrics, but the point is that there's nothing that Assassin's Creed Shadows can do to ultimately dig the company, that being Ubisoft Corporate. There's nothing that Assassin's Creed Shadows can do that's going to dig the company out of the position or the hole that they've dug themselves into. In fact, the best thing that Assassin's Creed Shadows can do is kind of reinforce the strength and the consistency of the Assassin's Creed brand. Now, bear with me because we're going to talk about a few more financial ratios, and then I swear we're going to get off the financial ratios part because, well, hey, we have other things to talk about. Particularly, we've got to get to the why. Why create the subsidiary with Tencent? But prior to that, I do want to give you a couple other ratios, financial ratios to consider, and why Ubisoft's current financial picture is not so great. So we're going to talk about it. We're going to talk about return on equity. The return on equity ratio is basically a financial ratio that indicates how efficiently a business generates profit from its shareholders' equity. It's a pretty simple one, right? It represents how much profit your company makes for every dollar invested by the shareholders and the return to those, and what return those investors can expect. Just put it out there. This is not something you want to be negative, right? You want this to be a positive value, right? So you want it to be a positive financial value, positive financial ratio. But Ubisoft's return on equity ratio, incredibly bad when they closed out fiscal year 2023, minus 30% when they closed out fiscal year 2023. When they closed out fiscal year March 31st, 2024, it crept back up a little bit to 9.39%. But then currently in 24-25, the last reported number for them is about negative 3.3%. So you saw they had a very poor fiscal year 23, small recovery with fiscal year 24. And then, of course, fiscal year 24-25, well, we still have to close the book on it. Again, we're kind of right back to that zero position, a little bit less than zero. We're also going to talk about their debt to free cash flow ratio. This is one of my personal favorite ratios because this is just straight up how debt leveraged are you versus your free cash flow at the end of the fiscal year. And while I don't have time to get into it today, I am not a fan of many of the methods and strategies that a lot of video game companies use when it comes to capitalization of development time and everything. So I'm a big fan of simply just looking at free cash flow because at the end of the day, cash is king, right? Cash is king at the end of the day because if you can't pay your bills, if you don't have cash physically flowing into the company, it doesn't matter how you twist the numbers around on your income statement and balance sheet. If you don't have cash flowing in, what are you doing? So in terms of their debt to free cash ratio, when Ubisoft closed out their March 31st, 2023 books, they were sitting at 3.84. When they closed out their March 31st, 2024 books, they were sitting at 4.92. And when they have yet to close out their current set of fiscal year books for the fiscal year 24-25, but the last reported number, I think coming out of H1, was 3.91. So just to give you some context of this number here, higher is bad, right? The higher that number goes, the worse, because that means that you have a lot of debt stacking up compared to your ability to generate free cash. Now, let's compare this to one of the better cash driving companies in the business, Electronic Arts. Coming out of Electronic Arts is, can you say that? Electronic Arts is coming out of the Electronic Arts March 31st, 2023 books. When they closed the books on March 31st, 2023, they were looking at a debt to free cash ratio of 1.66. When they closed out the books on March 31st, 2024, they were looking at 1.04. And even though we have yet to get the final books for the year, the last reported number from them on their debt to free cash ratio was 1.21. So you can see the comparison between Electronic Arts and Ubisoft in that Electronic Arts has a much healthier debt to free cash position. Okay, I hope you're still with me through all of that because what I tried to do with the front half or 2/3 of this episode was paint the picture of where Ubisoft sits financially, and now we're gonna take what we understand from that understanding from that financial image of Ubisoft, and we're going to apply it to why would Ubisoft now create a subsidiary within the structure of the company instead of just reinvesting at the top level or trying to fix the financials and double down on the core at the top level. And this is what I think it comes down to. So I'm going to admit right now that I am going to be entering what I'll call educated speculative territory. So we don't know what happened behind closed doors. I can only kind of talk you through what would be a typical conversation at these broad company levels. And this is what I think it comes down to, at least in terms of why Ubisoft creates a subsidiary. Keep in mind as well that Tencent is already an investor in not only Ubisoft, the corporate entity, but in the holding company of the biggest shareholder of Ubisoft shares. There was, I think it was back in 2022, Tencent reinvested heavily in the Guillemot. I'm not exactly sure how to pronounce the family's name who owns most of the voting rights in Ubisoft. But the Tencent reinvested significantly in we'll just call them the G brothers. How about that? Because I don't want to keep saying that name. Reinvested in their holding company, which also gave them the ability, because I think at the time they owned about 5% of Ubisoft corporate shares, but investing in the holding company also gave them the ability to reinvest in Ubisoft bigger. So the point is, it is a mess of investments here, okay? Just, we're not going to try to sort through it all right now. The point is that Tencent was already significantly invested in Ubisoft, so they have a stake in the survival of that company. So put yourself in the shoes of an acting agent of GBL. GBL is the family that still owns 50.5 or 51% of the voting rights in Ubisoft. Put yourself in the shoes of senior executive management at Ubisoft, or even the executive board at GBL. Okay, you already know that Tencent has a stake in the survival of the company because they have significantly invested in Ubisoft in the past. So you go back to them and you say, let's make another deal, right? Could you invest more in the company? Could you provide us with cash, right? What can you provide to us for perhaps more voting rights or shares in the company, whether it's the holding company or Ubisoft, right? What can you do for us? And I suspect, again, this is where we get into the speculative territory. I suspect that Tencent largely approached that conversation in terms of risk management, because now Tencent is looking at Ubisoft corporate. They can see the financial position that they're in, and Tencent is saying to the executive leadership or any of the controlling family members, and they're saying, well, you've got to bring our risk portfolio down. If we're going to reinvest into Ubisoft in some capacity, you've got to get the risk portfolio down, because right now this is a mess. This is a mess. We cannot put more money into a sinking ship, right? And again, as I said before, I don't care how great Assassin's Creed Shadows does. The rest of Ubisoft is a mess financially. So if you're Tencent, you need to get risk out of the next investment, because the track record from your previous holdings has not been great. So you're saying to GBL or Ubisoft executive leadership, you're saying to them, I need a better deal. And so what I can only speculate happened is that Ubisoft offers up this deal. They say, here you go, Tencent. We're going to take our 3 most profitable franchises. We're going to take Assassin's Creed, Far Cry, and Tom Clancy's Rainbow Six Siege, or Tom Clancy's Rainbow Six brand, and we're going to spin that off into its own subsidiary, and we're going to offer you some financial stakes and payout in that subsidiary specifically, because we are taking our most profitable franchises into that single legal entity. And now, Tencent, your corporate entity will be paid out from our most profitable franchises. And clearly we know at this point that Tencent accepted that deal. Now, it's obviously, we can speculate how much of that was Ubisoft offering it up versus how much of that was Tencent saying, well, hey, could you twist the deal like this? Could you give us some more, 3 most profitable franchises? We don't know, right? We don't know who is sitting at the table demanding what, but I suspect the conversation went somewhere around the way I just described it, right? Clearly, and I think this is clear. I don't think you can speculate about this. Clearly, Ubisoft had to come to the table and offer Tencent a better deal than just reinvesting in the top level company, because you don't get a subsidiary without that, right? I mean, obviously there was incentive on both sides to spin something off into its own subsidiary so that not only can Ubisoft start to leverage that company, that subsidiary specifically for their core franchises, but now Tencent can say, well, we now benefit from those core most profitable franchises because as you know from the press release, Tencent threw in about 25% of the value of the subsidiary. So all of this now brings us to the $1 million question. What happens to Ubisoft corporate? What about all of the other franchises that are still in the umbrella of Ubisoft corporate, not the subsidiary? What about all the employees that are still within the umbrella of Ubisoft, the corporate publicly traded entity? And this is highly speculative territory, right? We just don't know what tomorrow is going to bring. So I don't want you to write something down in stone here, right? There is so much that could happen at this point. So what I'm going to reference at this point is what at the corporate level we've typically seen in these kind of situations, right? So if we just look at examples from the past, here's what I speculate is going to happen to Ubisoft corporate. On a general level, Ubisoft corporate is going to continue to shrink. When I say shrink, I mean it is likely they are going to see additional layoffs. It is likely that you're going to see the labor count, the head count at Ubisoft corporate reduced. You're likely going to see, or probably, likely might be the best term, but you're probably going to see other additional cash raising opportunities at Ubisoft corporate, whereas whether they might license some additional IP or they might even sell off entire franchises or IPs. So that I think that's all on the table. But overall, I think you're going to see a drive to continue to shrink the size of Ubisoft corporate in one way or another or multiple ways. And that likely includes trying to pay down some of that debt, because from the way that the deal was structured, the new subsidiary is just a subsidiary with those franchises and the labor pools from those franchises. All of the corporate debt stayed at the top level. So now you almost have, unfortunately, you have what looks like an unhealthy portion of the company versus a healthy portion of the company. And when you have a situation like that, the only outcome I think that makes sense is a continual shrinkage and a drive to make the corporate portion of the company more efficient and effective so that it is, this is again all speculation, but I think you see a future Ubisoft where the corporate entity is a lot smaller. They're more efficient, a much smaller labor pool, right? Where they almost become more of an administrative responsibility of the company, and the Ubisoft subsidiary is what's driving the company cash flow. Now, that said, there's clearly a lot to unpack there. You've got several franchises still within Ubisoft corporate. You have any projects that are unannounced. You have Beyond Good and Evil, wherever the heck that went. You've got the rest of the Tom Clancy stuff. You've got Just Dance. Just Dance is their yearly production, right? Kind of like almost like a sports title, right? They've got Just Dance. And of course, you can't forget about The Division. As far as we know, The Division 3 is still in production somewhere. So there's still a lot to unpack and sort out at the main corporate Ubisoft entity, not the subsidiary that they just spun off, but the main corporate Ubisoft entity. And I think it's going to take some time to see how that all plays out. I mean, sure, I'm sitting here speculating that maybe it's going to be smaller, maybe it's going to be more efficient, but we just don't know, right? And I don't want to sit here and pretend that I know 100% what's going to happen. But when you typically see these large corporate restructurings like this, the typical response is that the main corporate entity becomes smaller by some degree, more efficient by some degree, and they spend a lot of that time trying to pay down debt, raise cash, and become a more efficient organization. How far Ubisoft gets with that, I think is up in the air right now, and maybe we'll get some more. Maybe we'll get some more of that at the end of the year, fiscal year 24-25 report. And if we do, hey, you can look back at this and say, hey, they answered some of these questions. So anyway, that's the show. That's episode 20 of Concise Game Reviews Special Edition this time. If you like what you hear, hit the like button, subscribe to the channel. If you're listening to this on YouTube, if you're listening to it on your podcast host, subscribe on there. I appreciate you listening and checking out the show. This is Relicar Delta signing out.